Hello, everyone. Welcome to this last day of August presentation, and welcome. My name is Stephen Primo, President and Founder of Specialist Trading, and today I want to talk to you about powerful short-term trades that last only 1 to 5 trading days. Now, the reason why we're focusing on such a short-term outlook is because of the volatility that's recently contributed to the market environment. A lot of times you see the market was going up coming into the month of August, and then all of a sudden we were hit with a strong downward move. Then there's a couple of days of bouncing and then right back down again. So this makes a lot of traders weary of holding positions for that long of a time overnight. Rather than holding on to a position 2 or 3 or 4 weeks, they'd rather get out in less than 5 days. That way there's not a lot of risk involved. For example, let's take a look at this chart right here. Here's one in ISRG. Okay, most traders looking at this would say, well, yeah, we're in a nice strong uptrend and things are looking pretty good. But then all of a sudden, the next day you have a strong downward move. You say to yourself, well, for all intents and purposes, that short-term uptrend has been broken. Maybe I should get out. And then 2 or 3 days later, it's right back up. So it's very difficult to figure out with a lot of this volatility, whether you should be long or short, or whether you want to risk holding on to a position, as we said, 2, 3, 4 weeks. Well, what I'm going to be sharing with you today, a very unique strategy would have generated a buy signal right here. And in 2 days, you would have exited with a 14-point gain. Now, let's say you exited and you watch the market continue to go higher. Well, this is what happens with most traders. They get greedy, but remember, there's still volatility in the markets. Had you held on to your long position, your initial long position, look what would have happened ultimately. And if you had held on the way you normally do, you most likely would have given back all of your profits. So that's why you want to get in and out quickly in these volatile markets. Now, on top of that, this strategy not only produces buy signals, but sell signals as well. As you can see here, just a few days ago, a sell signal was generated and you could have potentially captured 14 points in just 1 day. So this is what we're going to be talking about: powerful short-term trades that last 1 to 5 trading days. And this makes it unique for trading options because you're not tying up a lot of time. Therefore, you don't have a lot of time decay, and you're in and out very quickly. You don't have to spend an exorbitant amount of money for the premiums trading options, and you have some very nice quick profits potentially. Now, everything going to be seen today is displayed coming from our platform, the PTS Primo charting platform I developed personally with proprietary strategies to make trading simple and to teach you how to identify these short-term signals on your own. So welcome to this educational presentation. My name is Stephen Primo. Once again, I am the founder of Specialist Trading. I've been trading now for 45 years. I started my career on the floor of the Pacific Stock Exchange. I was a specialist, meaning I made markets or specialized in making markets at about 50 stocks. So that's where we get the name Specialist Trading. A specialist is someone on the floor who was making those weird hand signals in front of those large wooden booths that had a lot of paper in front of them. That's what I did for roughly 9 years on the floor. I made markets during the crash of '87 and the bull market that followed. So I can honestly say in my 45 years of trading, I have seen and traded just about every strategy, every system, every technique, and also been trading in any environment you can think of: straight up, straight down, volatile markets, very flat, non-energetic markets. So in my 45 years of trading, I know what works in terms of consistency, and I know what doesn't work. So therefore, I teamed up with proprietary strategies and we created Specialist Trading with one goal in mind, and that was simply to educate traders so that ultimately you can be in charge of your own trading destiny and make your own trading decisions. So this is what we do at Specialist Trading, and you'll see that attention to detail in today's educational class. Now, before we begin, we are required by law to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results. I believe I have about 160 slides here today, so a lot of examples to share with you. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So please remember that all examples, since we are an educational company, all examples are strictly for educational purposes only. Now, we have a good crew here today. I see a lot of new faces. If you haven't done so already, please feel free to follow us on Twitter. There's our handle right there. Every day I post different information. I've been posting this week different ways to get in and out of the market on a quick basis. So lots of great free examples, as well as little bits of financial wisdom to help you on your way. Please feel free to follow us on Twitter. Now, as I stated in the opening statements, we are first and foremost an educational company. And I know a lot of traders say, well, Steve, why do you focus so much on education? Why don't you just tell me what to buy or what to sell? That's the way most other websites perform. That's the way they construct their business plan. I personally don't believe in that. In fact, I believe that's at the root of most of your trading difficulties. I think that's why most traders fail, is because you take yourself out of the game. Unfortunately, we've all been taught this is the way to become successful, right? You have to follow some guru or follow some signal service or listen to the guys on TV or the earnings or the jobless claims, and they'll tell you what to buy or whether you should be buying or selling. They'll tell you what they like, what they don't like, and you just simply follow along, and that'll make you a successful trader, right? It's that simple. Well, believe it or not, I was taught the same thing 45 years ago, okay? And my first 2 years, I struggled tremendously. I was probably doing the same thing many of you are doing, waiting for someone or something to tell me what to buy or sell, and it didn't work then. So that, what I truly believe, is what causes most traders to fail, upwards estimates of 85%. What you need to do is make your own trading decisions. Most traders feel they don't have enough experience. I haven't been trading long enough. I don't have enough money, Steve, or I didn't go to college and study economics, so I don't know these things. Well, trust me, I didn't either, okay? I learned all these things while I was on the floor. And if you're blindly following along with someone or something is telling you what to buy or sell, I can almost guarantee that you're going to lose everything, because that's just the way the entire industry is based upon, and that's why most traders fail. It's been my experience that the only traders that continue to trade, not just a couple of months or a couple of years, but 20, 30, 40 years down the road, are the ones that make their own trading decisions. And most traders are afraid to do that because they feel as if they don't have enough information. Well, that's the service we provide. Once again, I've been trading for 45 years. As I said earlier, I know what works in terms of consistency and I know what doesn't. So my goal is simply to teach you how to trade with these techniques and methods, what we call the specialist edge. So therefore, once we teach you what to look for, what to identify, how to trade them, then you can make your own trading decisions, not me. You'll never get a signal service here at Specialist Trading. You'll never have a chat room or a trading room, because those are things that are basically crutches that take you away from being successful. If you want to be a successful trader, you have to do it on your own. You have to make your own decisions. So this is our goal, not to trade for you, but to teach you how to trade with the specialist edge. Now, before we begin today, just a few announcements. As I said, I have roughly 160 slides to share with you, so I don't want to take every slide to answer a question. If you do have a question, please wait till the end of class. I promise I'll get to each and every one of them. Also, this is a static PowerPoint presentation. It's not a Zoom interactive one. So please disable all cameras and microphones. Okay, we will answer questions via the chat box or the question and answer box at the end of the presentation, not through talking over the microphone or through your cameras, okay? And then lastly, the most important question I get is this being recorded? Yes, it is. We record all of our webinars. So if you have to leave early or if you're having technical issues, many times if you just log off and log back on again, your issues will be resolved. But if not, don't worry. Each and every one of you will be sent a link to this recording. You can watch it whenever you like at your own leisure, okay? So please remember to ask questions at the end, turn off your cameras and microphones, and you'll get a recording at the end. With that stated, let's begin today's educational presentation. Now remember, we're going to be talking about specifically short-term trades. We need a strategy that is designed to trade the short term. And that strategy is strategy number 10, okay? So let me give you some of the highlights of this particular method. It's specialist trading's only short-term strategy. And when we mean short-term, we mean that the requirements, all of the requirements are based only on short-term tools or short-term techniques, short-term rules. Usually our methods are based on overall trend indicators. This is not, only based on short-term requirements. Now, this does not apply the buy-sell line to determine the trend. Now, the buy-sell line, if you're familiar with any of my other webinars, is our overall trend identifier, okay? We're not going to use that here. We're only looking at the short term. Now, this is a combination indicator-based and pattern recognition method. Now, usually our methods are either one or the other. They're based on indicators and their relationship to one another, or they're based on a specific pattern. Well, this is very unique because it combines both of those together. Now, most trades are designed to last, as we said, 1 to 5 trading days. Now, not to worry, because I know a lot of people say, well, Steve, that's not really my style. I'd like to hold a little bit longer. The good news is, in the course, we teach you ways how to hold on longer, and we show you how to use it in different time frames as well. In fact, I'll show you some examples of that later on in today's presentation. But because it's designed for such a small time frame, 1 to 5 days or 1 to 5 bars, it makes it perfect to apply this to option trading. We know we have a lot of option traders who like to apply options to their trading. This is a perfect method for that. Why? Because you're not tying your money up. And because of the way the buy signals and sell signals are designed, you'll usually be able to get, it's not guaranteed, but usually be able to get a lower premium because you're buying at the lower range of a setup and you're selling at the higher range. So this will make it unique for trading options. If you're an option trader, strategy number 10 is perfect way to go. Now we have in the course both an aggressive and a conservative version, way to trade this particular method. Now, this is also can be used as a short-term method to offset long-term investments. I know a lot of traders say, well, Steve, I'm not a short-term trader. I really don't like to hold stuff for that short of a time. Well, that's okay. If we go into a sustained downward market, this is something to offset your long-term investments. A lot of traders just like to invest and hold for the long term, right? For 6 months to a year, maybe even 5 years. Well, if you're having difficulty with those investments and you're holding on to them, this is another way to offset those losses by trading a short-term method. Now, lastly, our edge here, which I explain every week in all of our methods, most especially strategy 10, is consistency. I know a lot of traders say, well, consistency, that's great. That means it has a lot of winners. No, that's not what consistency means. Consistency is an awareness that you will have losses from time to time. And that's okay, because a consistent method is one that's able to recoup those losses. You see, most traders are, taken, for granted when they buy a strategy or a system that has all these phenomenal numbers. It's been back tested 10 years and, it has 90% winners. And so they get all excited. And sure, every once in a while, this strategy or system hits a home run. But the losses are tremendous. They're very big, they're very large, and oftentimes you will go into these long sustained downward drawdowns where you lose a lot. Now that's not a consistent method. A consistent method is the opposite. It's one that has a stair-step approach, all right? 2 steps forward, 1 step back, with those 1 steps back being small losses. So that's what we're saying when we mean that our methods are consistent. A 2 steps forward, 1 step back approach, okay? So there will be losses. In fact, I'll show you a couple of examples in that later on today. Okay, so let's go over this process that I want to share with you to trade and have these high probability setups, these powerful trades that last 1 to 5 days. Here's the process you would do using strategy number 10. Okay, firstly, you would click on signal arrows in the strategy number 10 drop-down menu. Okay, so on our platform, right here, let's say you're looking at ADSK. And you say, okay, this is interesting. I like to trade options on this, but let's see what strategy number 10 is telling me. So in our green strategy tab right here with all of our methods and techniques, go to strategy number 10, click that on, and you'll see a drop-down menu appear. Okay, out of all these different categories, click on signal arrows. Now remember, in the course, we teach you everything. This is not a black box system where you have no idea what it's based on. You have no idea what you're doing. You're just blindly following along. Remember, that goes against our philosophy. We want you to understand what's behind strategy 10. So you fully understand the rules, you fully understand the process, but this is just showing you a simple way, once you understand the process, how to get involved in a trade. So click on signal arrows. All right, now you see here we have 2. All right, now this one actually didn't work out very well. It kind of, if you had bought, well, it would have gone down. So a lot of traders say, well, Steve, I don't know if I want to take the second signal because it's probably going to be loser too, right? I did this before with that other strategy I bought from that other so-called trader, and I lost a lot of money just blindly following along. Well, this takes us now to a filter. All right, so once we've clicked on the signal arrows, we only want to trade buy signals that closed down on the day. Okay, so we're going to see a green up arrow, but the bar above has to have closed down on that day. So as we look at these 2 examples, did this one close down on the day? Absolutely not. So we're not going to take that trade. And see, we would have not lost any money. Now, here's the second choice we have. Here's a buy signal with a green up arrow. Did it close up on the day? No, it closed down. So we can buy this. So on the close of the day, you could have bought this, or on the opening of the next day. And this brings us to where we're going to exit with a profit. We're going to exit with a profit when price closes above the most recent high. So if we look at this chart again, here's the most recent high, right? This is the last time the actual signal bars made a high. So you want to draw some type of a line there. Just keep that in mind. We have to close above here, and that will be where we'll exit. So obviously we'll have a nice profit if we close above there. But what if it doesn't go up? What if it goes down? Where do we get out? Do we just keep holding on to it the way so many other traders do? Well, here's our stop loss. We're going to get stopped out with a loss if and when price closes below the signal bar. Remember, the signal bar is the bar that is above the arrow. All right. So if we close below the low right here, if we close anywhere below here, we're getting out because most likely it's not going to work. All right. So we have the parameters. We know that we're not going to take this one. We're going to take this one. We know that we'll exit if we close above here. We know that we'll exit with a loss if we close below here. And it's that simple. And in one day, look what happened. Went up above. You would have exited with a quick 8-point gain in one day. Simple, right? That's all it takes. You have to have a consistent method. Now you notice I didn't base anything off interest rates. I didn't base anything off announcements or earnings or things of that nature. Obviously, something caused this to gap up the next day and close much higher. We didn't know that because none of this is based on fundamental news. If you know how to listen to the market, if you know how to react off of what the market is telling you, not off of what some guy's telling you afterwards, after the market closes, and he thinks, well, the earnings are going to be bad, you should sell this. In the last 2 days, it's closed down. This is why most traders fail, because we're not taught to listen to the market. We're taught to listen to some guy on TV or somebody in a chat room. But if you base your decisions off of what the market's telling you, the very thing you're trading, the source of what you're trading, you'll have higher levels of consistency. Okay. Now, I'm not going to go over it for a sell process. I'll show you some examples, but it's the same exact process. We just turn everything upside down. In other words, you'll click on the signal arrows in the strategy 10 drop-down menu, and you'll only trade sell signals that closed up on the day. Remember, for buys, they had to close down, but for sell signals, they have to close up. Now we're going to exit with a profit when price closes below the most recent low, and we'll get stopped out with a loss if and when prices closes above the signal bar. Okay, that's it. Now, let's look at some recent strategy 10 signals. Most of these happened within the last 3 or 4 weeks. Okay, so these are not strategies and setups that happened 5 years ago. And you go to webinars and you go, wow, that's amazing. And then you look at the date, it was 2019. Okay, no, you want to see things that happened recently because that will give you the confidence to trade this. All right, so let's look at this. And remember, everything you're seeing today can only be executed using our platform. That's the PTS Primo charting platform, because it actually teaches you how to trade these short-term markets. Okay, let's look at Amazon. All right, this was just 2 or 3 weeks ago. Some volatility here. It's going up and then going back down. Let's see what strategy 10 says. Click on strategy 10 in the drop-down menu. Click on signal arrows, and we see that we have 3 buy signals here over this short period of time, basically from the beginning of August. Okay. Now, remember, we only want to take the buy signals that closed down on the day. So this means we're not going to take this one because it closed up, but we'll take this one. We'll take this one. So how would the first one have worked out? Okay, we would have bought on the close, but we have to put our parameters in there. Remember, we will sell if it closes above here, and we will be stopped out if it closed below. Obviously, in one day it closed above, and we exited with a quick 5 points. Okay, not a bad little trade. 5 quick points. Now, had we taken the second signal, we would have lost. But remember, we're not going to take signals that close up. They have to close down. Now, this third signal did close down, so we're going to take that. Let's draw parameters. Where's the most recent high? The most recent high is right up here. So this is where we're going to exit if it closes above. Where's the low of the signal bar? It's right here. So if we close below this, we're going to exit with a loss. So let's see what happened. Now that we enter into the trade, all you do is wait, right? See, that's what trading is. Basically, it's preparation. It's knowing your plan. And then once you get in, you just wait. It's like fishing, okay? If your trading is complicated, if you're screaming and yelling on 2 or 3 phones, if you have 20 monitors in front of you watching multiple markets in different time frames, you're actually doing it incorrectly. If you're trading correctly, it's very boring. Just like this, you see the setup, you decide to take the trade, and you wait, okay? So we wait maybe about 4 or 5 days, and we exit with an 8-point gain, okay? So in just in 2 setups here, you could have made 13 points very quickly. Here's another example, this one in ODFL. It looked like it was going up, and then the volatility kicked in and we're going down, right? Well, let's see what strategy 10 says. Click it on, click on signal arrows, and we have actually 2 buy signals. Now, they're both valid because they closed down on the day. Let's say you had taken the very first one right here, okay? Well, you set your parameters. This is where you're going to sell. This is the most recent high. So if it closes above, you're going to exit with a profit. Now, if it closes below this signal bar, the low of the signal bar, you're going to exit with a loss. Now we see here that it traded below both the following days, but look where the close was. It closed above each day. So you never would have been stopped out. You would have had to wait till the very end of the day to see and then sold at the market or the next day. But we never closed below that red line. So you're still in the trade. Now, had you taken the second signal, well, you're still going to use this high as your exit with a profit. And here would be, this is incorrect. This would actually be where you would have your stop loss for this setup, okay? Below this low. And even this one went well below, but it never closed below. So on both of these buy signals, whichever one you decided to take, or if you took both, you would still be in them, even though the market went lower. And then look what happened on the third day. There's a nice 20-point gain in roughly about 3 days, okay? Let's look at this one in Microsoft. Now we have a couple of buy signals here, okay? One here and one here. Now, obviously, oh, I'm sorry, 3 altogether. But out of these 3, only 1 was valid. Why? Because these 2 closed up and this one closed down. So therefore, this is the one we'll take. And we look for the most recent high, which would have been right here, okay? So we draw parameters. And here's where we get out with a stop. But guess what? In 1 day, we closed above and made a quick 8 points. Now, there was the buy signal here, but we didn't take it. That would have been a nice gesture because it didn't do anything. But then most traders say, well, yeah, but Steve, why didn't I just stay in there? Look at this. Remember, this is a strategy you use when there's a lot of volatility and you don't want to be tying up your money in the market for a long period of time. Why? Because if you hold on to that mindset, thinking that there's not that much volatility and you'll be all right, well, you may get some more signals that are faulty and look what happens, okay? So you don't want to be tying your money up. Now, if you're the type of trader that says, that's okay, I have tons of money, I'll tie my money up, okay, then go ahead. But most traders don't like to have that risk. They want to get in and out quickly, all right? So we didn't take any of these signals. They closed up on the day, so that's good. We didn't lose any money, but look what happened here. There's another sell signal here. It closed up on the day, so we're going to take this one. Here's where we'll exit with a profit. If we close below, here's where we'll get out with a loss. And in 1 day, 11 points. So in just holding on for 2 nights, okay, this one right here and this one right here, that's a 19-point gain. And you didn't have to tie up your money longer than 1 night each on those trades. Now, this is the chart we looked at in the beginning of the presentation, ISRG. Remember, we would look at this and say, well, this is where volatility kicks in. It's going up, it's going down, it's going back up again. But just applying strategy 10 alone, we have a buy signal right here, and it's valid because it closed down on the day. So this is telling us it's okay. We are okay to buy this one. Let's set our parameters, all right? Here is the last most recent high. Here is the low of the signal bar. So if we close below, we're stopped out with a loss. If we close above, we got a nice little gain. So let's see what happened. In 2 days, we made 14 points. Not a bad little trade for 2 days. I remember it went up and we had a number of signals being generated, but each and every one of these signals closed up on the day. That means we're not going to take any of them. That would have been a good choice because look what happened. Right back down again. You would have given away all your profit on all of those. Now we have a sell signal finally here on the 25th of August. This was just last week, okay? it closed up on the day. So that's a valid sell signal. We set our parameters. If we keep going up and close above here, we're stopped out with a loss. But if we go down and close below here, we have a gain. And look what happened. On the next day, we had a very strong downward market. You would have exited with 1 day gain of 14 points. So you could have potentially made 28 points and just been in the market for 3 days out of this entire month, okay? That's not a bad way to trade for the short term. Let's look at PayX. Now, I know a lot of you are saying, well, Steve, yeah, but there's some signals that work really nicely. Why do I have to have it close on the bottom? Well, you don't have to. Remember, you're in charge of your trading. I'm just sharing with you high probability setups. But let me show you how well this works. Remember, here's the strategy 10 buy signal. Now, if you had taken this, let's see what would have happened. Remember, mostly we teach our students not to take this because it closed up on the day. But if you had taken it, look what happened. So that's why we only want to take buy signals that close down. We only want to take sell signals that close up. For example, here's a sell signal. Did it close down or up? It closed up. So that's a high probability setup. If you were buying puts, well, the premiums are going to be very inexpensive because it closed at or near its high. So that's what you want, right? So you set your parameters. If we continue to go higher, well, you would have been stopped out. But if we close below here, you've got a nice profit. And in 1 day, you could have captured 28 points. Do you think you would have had a nice little option trade there? This is why option traders love this strategy, because it's specifically built for short-term trading to be in the market 1 to 5 days. Okay, let's look at Netflix, okay? Now, this was in about 3 weeks ago in the second week of August. All right, doesn't look like much is happening. We apply strategy number 10, all right? Go through the process again. Click on signal arrows. And there's 2 buy signals. So which one do we take? In order for it to be a valid buy signal, it has to close down. So did this one close down? No, it closed up. So we're not going to take that one. But we will take this one, okay? So we'll take this buy signal right here. Here is our most recent high. So that's where we'll get out if it trades or closes, I should say, closes above. And if it closes below here, this is where we'll get out with a loss. So these are our parameters. Let's see what happened. In 1 day, we went right above, all right? So what do we have? We made 30 points in 1 day. Not a bad little trade, right? Either if we owned it, the actual stock, or if we bought calls, or if we had some type of spread with an upward bias, that's a nice 1 day trade, okay? Now let's see what happened after that. Well, didn't go much higher, but 2 more buy signals were generated. Now, are we going to take this one? Closed up on the day. Nope, we don't take that one. We'll take this one because it closed down on the day. So let's see what happened. We're going to draw parameters right here. If we close above, that means we have a nice profit. But if we close below, we will be stopped out with a loss. So what happened? Well, the very next day, we opened and closed lower. So this is a loss, all right? If we would have bought here and sold here, we would have lost 4 points, okay? Remember, consistency is an awareness that you will have losses from time to time. That's okay. Don't be like most traders and say, oh boy, this stuff doesn't work. I got sold a faulty strategy because this stuff never works. No, you will have losses. That's perfectly okay. Some of the best traders I know, myself included, lose all the time. That's okay. We just have the confidence in knowing that we can recoup those losses because our method is based in consistency. So let's see what happened after this loss. Well, we went lower and we had 2 more signals. Now here's a buy signal. In order for us to take this, it had to close lower. Did it close lower? No, it closed higher, so we didn't take that one. But in order for us to take this sell signal, it had to close up on the day. And did it close up? Yes, it did. So that's a valid sell signal. So we look for the most recent low, which is right here. Whoops, I should have had this right here. This was the most recent low, and this was the point of where our stop should be. Let's see what happened, okay? Even though this line should be right here, you still would have exited with an 11-point gain. So that 11 points would have made back the 4-point loss. So this is what we mean by consistency. So on balance, even with the 4-point loss, you still would have made, I believe, upwards of 37 points, just holding, I believe, 3 days for each of these and just having 3 trades in about 3 weeks. Not a bad way to trade, right? Let's look quickly at some other time frames and some other markets. Now, remember, we know that not everyone likes to trade this way. Some people say, well, Steve, I don't like to trade stocks. I trade currency pairs, futures. I even trade cryptos, or I like to hold on for a longer time frame. Okay, let me show you how the process still can be applied. Here's a weekly chart of the spiders, and this is going back to the beginning of this year, all right? Now, if you go for longer time frames, like weekly or monthly time frames, you'll still have signals being generated, but they will be less than if you look at a daily bar, okay, or a 4-hour chart. For example, we have a buy signal right here in the spiders. This was in December. It closed down on the day, so it was a valid buy signal. Here is the area if you would have been stopped out on the week if we closed below there. And here's where you want to exit if we close above, okay? Now, as we can see here, we opened lower on this week, traded lower, but we still closed above. So for a week, you're still in the trade. And then the next week, we closed above. So you would have exited the spiders with a nice 15-point gain. And that represents hundreds of points in the Dow, okay? So you wanted to get out after 2 weeks because look what happened. The market fell out of bed. And now in May, coming into June, we have another signal, but this time it's a sell, okay, on this week. Now, in order to take this, remember, once again, just like daily bars, we need this to close up on the day, which it did, or up on the week, I should say. So that's a valid sell signal. Here's our parameters once again. And once again, these are incorrect. This should be below the most recent low. And this is right here where you get stopped out. So let's see what happened. A nice little 50-point gain in 3 weeks. Okay, so that would have been comparable to 3 daily bars. So on balance, you would have made 65 points in about 6 months' time. And this is once again why we always caution people to exit and not to hold on too long, to follow the parameters, because look what happened after that. You would have given back all of your profit here on this 3-week trade had you held on to being short the spiders. All right, that's on a weekly chart. Let's look at an entirely different market. Let's look at the Australian dollar. These are currency pairs, all right? Same process applies. We have a buy signal right here. It closed down on the day. So we're going to buy it at the close. If we close below that setup bar, that's where we'll exit with a loss. But here's our most recent high. So we want to see it close above here for a profit. And in 1 day, 120 pips. That's roughly about $1,200. Now, I know a lot of students would say, but yeah, Steve, look at it, it kept going higher. Well, yes, but remember, you have to be careful if it's a volatile market, because look what happened after that. Had you held on in a volatile market, you would have given all your profits away and most likely had this trade turn into a loss. Now, here's a 4-hour chart of the euro yen. Same process applies. Here's the buy signal. It closed down on the day, so it's valid. This is a 4-hour chart. Here's where we'd be stopped out if we close below this. We never closed below. So you would have been holding on the entire time, and in 1 day, closed above here for 150 pips in 1 day. That's over $1,500 per unit, okay? How about a weekly chart of Bitcoin, okay? For any crypto traders out there. Same process as we were looking at earlier with the spiders. The same process applies. We have a buy signal. It closed down on the week. So you could have purchased Bitcoin in April. This was about a year ago, okay? Here's where you place your stop if you close below this. And here's where you want to get out by the most recent high. So in 1 week, you could have made over 7,000 points, okay? And this is why we tell traders to be careful not to hold on too long, because look what happened after that, and it's continued to go down even lower. Okay, so let's recap what we taught you today. Strategy number 10, buy and sell process. Here's the buy setup process. Remember, the sells would just be the opposite. Click on the signal arrows on the PTS Primo charting platform in the strategy number 10 signal box, and in the drop-down menu, you want to click on signal arrows, okay? Now, you'll see the signals. They'll be green for up signals and red for downwards. If you have a buy signal, you're only going to trade a buy signal that closes down on the day. If you get a sell signal, obviously it'll be the opposite. You want to see it close up on the day. Now, you'll exit with a profit, a buy signal, if it closes above the most recent high. If it's a sell signal, you'll exit with a profit if it closes below the most recent low. Now, what if it doesn't? What if you have a faulty trade? All right, well, if you have a buy signal, you'll get stopped out with a loss when price closes below the signal bar. That's the bar that the green arrow is. Obviously, it's the opposite. If you get a sell signal, you get stopped out with a loss if it closes above the signal bar with the red arrow, okay? It's that simple. So ask yourself, do you think our short-term strategy number 10 could help your trading? Remember, regardless if you buy or sell stocks or if you're an option trader, this is a great strategy to have in the current volatile environment. Well, here's our special attendee discount for all of you attending today and are interested in trading powerful setups in 1 to 5 days or less. We're going to offer you our short-term trend trader strategy number 10. This is an entirely new short-term strategy. You can also apply it to long-term trends as well, as I just shared with you, but it's mainly built for that short-term market. It's a combo indicator pattern-based method. You're going to get all the complete course rules along with an aggressive as well as conservative version way to trade. Remember, most of these trades last 1 to 5 days. But remember, if you're looking at daily bars, it's basically 1 to 5 bars. If you're looking at weekly bars, it's 1 to 5 weeks. All right. If you're looking at monthly bars, it's 1 to 5 months. So you can apply it to any time frame you like. All right. The best thing is if you're an option trader, it makes it perfect for option trading. Okay. You're also going to get educational correspondence. You can correspond with me whenever you'd like if you have a question. Now, remember, everything you saw today was applied using the PTS Primo charting platform. All right. This is the way you can get these setups using our platform because it teaches you how to trade these short-term markets. So because of that, we're going to throw in a full year of our platform absolutely free. Now, I had a discussion with a new student a couple of days ago, and he says, so if I get this certain method, that means that's what I get on the platform, that's all that's included? No, you're also going to get a host of other things that I've accumulated in my 45 years that will help you trade as well. We just don't have enough time to go into all of them, but you're going to get all other things like the PET-D short-term directional tool, because the PET-D is included with this purchase. You're also going to get the strength of trend feature. You're also going to get our signal scanner. You're also going to get over 90 of the most prominent technical indicators, as well as personalized tech support. But there's also other things included, like automatic exit levels. Now, this is an entirely different exit plan, okay? Remember, we're sharing with you different ways to trade. It's up to you to decide how to trade this way. Now, I just shared with you one way to exit. There are upwards of 6 or 7 different exit plans, okay? I shared with you a very simple exit plan. Here's another one. This is by using what we call our range extension exits, okay? On the drop-down menu where you were clicking on signal arrows, all you have to do is click on extension exits, and these are an entirely different way to find out where to exit. For example, you will get these levels, and you can choose which one you like for your particular exiting point. If you want to get in and out of the trade quickly, you use this exit point. If you'd like to be a more moderate trader, you use this one. If you like to stay in longer, you use the third. And as you can see, had you chosen the third as your exit, you place a limit there to exit the trade. You would have had a nice little 13-point gain in just roughly about 3 days or so, or maybe about 5 days. So you see how simple that was. And look what happened once you got to that third exit level. Well, the momentum changed to the upside. This can also work to the upside as well. Here's a buy signal, strategy number 10. Once again, using our exit levels, you can choose a short, the intermediate, or longer one. Had you chosen the third exit level, well, you could have potentially made 28 points in 8 days, and once again, gotten out towards the very top. You see, this is entirely different from the exit plan I shared with you today. We like to say that our way of teaching is more like a buffet table. We present all these different choices for you, and it's up to you to decide which one makes you feel the most comfortable. Remember, our credo, our philosophy is you have to decide how to trade. Our job as a mentor, as an educator, is simply to provide you all of these different ways, work with you so that you can ultimately decide for yourself. That's what will make you a consistent trader. So here's our strategy number 10, great discount for today. Remember, this is also going to include the PET-D. Our new strategy with a special price is $49.95. Now, we realize that is expensive, but with the PET-D, so we're going to discount that. We're only going to pay $44.95. You'll save $500. We realize some people have the PET-D. So if you already have the Pet D, we're going to reduce it even more down to $34.95. And we're going to take it even to another level. We realize that many traders can't come up with either of these different scenarios. So for a limited time, we will have a way where you can only pay $29.95. You'll save $500, and we'll also have payment plans. So for less than all of this, you can come out with a very small deposit. You can still be up and running as early as today and establish a payment plan, okay? Remember, this includes a full year of the platform. So that's already thousands of dollars already kicked in with this discounted price. Now, if you're still not convinced, let me share with you what could have taken place had you scanned for these signals. One other thing we didn't mention, you can scan for these signals on a nightly basis. If you'd scanned for these roughly about 3 weeks ago in Meta, okay, you would have seen there were 2 buy signals here, all right? According to what we shared with you today, which one would you have taken? Now, this closed up on the day. What I taught you today, would you have taken that setup? Nope, you wouldn't have taken it. Why? Because we only want to take the signals that close down on the day. So therefore, you would have taken this one. This is a valid buy signal. Now, using the exit technique I taught you today, you would have exited if we closed above here, and you would have exited with a loss if you closed below this level. So you mark your brackets in right there. And now comes the hard part of waiting. You just simply wait. You're in the trade. Either you bought the puts, or I should say the calls, or a spread, or you bought the stock, and you simply wait. In one day, you would have exited with a nice 10-point gain. Not a bad little trade, right? Now you had another buy signal right here, but this closed unchanged or just up a little. It's hard to see on this, so we would have not taken this trade, and that would have been a wise decision. So you see how the volatility in this market would have had you losing money. You would have stayed in the trade too long or tried to get back in and given back your profits. This just happened in the last 2 or 3 weeks, a nice quick 10-point gain. Now remember, there are only 4 months remaining in 2022. This is the last day of August. Can you believe it? We're already at the end of summer. Take your trading to the next level with strategy number 10. This is the only method we have that's based entirely on short-term requirements. If the volatility remains in the market, if it continues going back and forth or even down very strongly, this is the method you'll want to have. If you're an option trader and you don't want to be in the market that long, 1 to 5 trading days, this is a great strategy to start out with, okay? All right, here's how to take advantage of this great offer. Contact Pro Trader Strategies. They're my sister site. They help me develop the platform. They're in charge of all the discounts and the pricing. I would highly suggest giving them a call if you're interested in all. There's absolutely no obligation. But if you want to know about establishing a payment plan, I would give them a call at 310-598-6677. They have trading consultants manning the phones. They would be happy to set up a payment plan with you where a small deposit gets you in right away. You don't have to come up with $44.95 or even $29.95. You can come up with much less price cost than that, and you can still be up and running as early as today. Remember, that includes a full year free of the platform. So this is a great way to get started, especially if you're an option trader. Give them a call. Once again, there's absolutely no obligation. Now, that link you see at the very bottom is the link that will take you to the info page as well as the sign up page. It's not a live link, but we've just posted a live link in the chat box. So if you open up your chat box, you'll see at the very bottom there is a link there that's highlighted. You can click that on and we'll take you to that page. Okay, we have about 10 or 15 minutes left in the presentation. I promised I would take this time to answer any questions. You can either go to your chat box or your question and answer box, and I will answer the questions while we have you here. I see there is one question here. Someone says, I got on a little late. Will the replay be sent out? Thanks. Yes, it will. All of our students and all of our participants will be getting a link to this presentation. So if you're on the fence, if you're really serious about taking your trading to the next level, but you're still thinking about it, watch the video. And I'm sure after seeing this again at your own leisure, you'll be convinced that this is the way to go, especially if you're an option trader as well, okay? Someone is asking, what do you mean by educational correspondence? Well, if you recall at the end, I said you can always contact me whenever you'd like if you have any questions or if something doesn't make sense, or even if you just want to check your work. Each and every one of my students gets my private email address. This goes directly to me, not an intern or not an assistant or no one at Pro Trader Strategies. It comes directly to me. and I will answer each and every one of your questions personally. So if you happen to have a question, or maybe you're new to this and you want to know a little bit more about how to trade it, how I would suggest a certain setup, you can contact me whenever you'd like. You're a student of mine now, and this is what you get included as well for the price of being a student. Okay. Someone says, you said this is great for option trading. Well, why is this so great? Well, once again, if you're an option trader, remember, we all know that options are a little bit different, because you not only have to predict which direction the stock is going to go, you have to predict it will happen in a certain amount of time. So therefore, you don't want it to happen in 2 to 3 months. You want it to happen quickly, because there's something called the time decay. And that means even though it may be going in the right direction, because it's taking so much time, you're losing the price of your option. It's losing value. So if it happens very quickly, the way this is designed to do, this is perfect for option trading. Okay, so if you're an option trader, someone thinking about trading options, that's why we suggest take a look at strategy number 10. It's perfectly designed for that, because it gets you in and out quickly. You don't have to hold on to an option for too long and watch your profits delete, even though you may be right in the stock going in the correct direction. Okay, so this is why a lot of our option students love to trade strategy number 10. Okay, any more questions? Good questions. Remember, if you're at all thinking about this, but you're just not certain, there's absolutely no obligation. We have trading consultants taking the phone calls right now. They would be more than happy to answer any question concerning price, concerning discounts. Remember, you can establish a payment plan. That's much less than the offers we shared with you a couple of slides ago. It's just a small deposit. You can still be up and running and be paying a small monthly fee every month, and you'll still be up and running possibly as early as today. So this is a great way to go if you're limited on funds, but you still want to be a part of the course. Okay. Okay, if there are no further questions, as we close here, let's take one last look at our disclaimer. And as we close here, I just want to thank you for taking time out of your Wednesday to join me. I hope you learned something, not only about trading, but about our philosophy of educating you and trying to put you in the driver's seat so that you can ultimately make your own trading decisions. Remember, I've been trading for 45 years, and the only traders I know who are still trading for that amount of time are the ones that make their own trading decisions. They don't go to chat rooms. They don't go to trading rooms. They don't watch news events on TV. They don't really care about that, earnings or economic reports. They simply know how to listen to the market. So that's my goal, to teach you all the things I've learned in 45 years and hopefully make you a consistent trader. Thank you so much for taking time out of your day, and I look forward to seeing you all in the strategy number 10 class. Thanks a lot. Have a great day. See you next time. Bye-bye.